Hey, welcome back to another video. Again, today we're talking about QYLD and we're going to compare it to using their same process of selling covered calls and how we can generate more income by doing it ourselves instead of actually just buying into QYLD. Now, I've had a lot of people comment and say that they don't really want to learn how to do the options for themselves. They just want to buy a stock and let it pay the dividends, which I understand, completely understand. I was doing that as well, and I'm by no means a professional at this, so this is not stock advice, financial advice whatsoever. This is kind of just a perspective that I'm using to make more money than just dividends with barely any more work, but just a bit more knowledge. So I'm hoping to impart some of that knowledge with you guys today and kind of take a reality check of how much you really need to understand to be able to make more money, a lot more money than just buying and holding cash covered call option, the things that do the stuff, Come on, man. Anyway, so we're gonna jump right into it. I'm gonna use QYLD, but this really applies to pretty much all of the covered call ETFs that you're gonna be using for this basically passive income. So obviously, investing in the ETFs that pay dividends, that is about as passive as you can get with income. By learning how to sell covered calls yourself, it will take you maybe 5 minutes. If you once you learn how to do it, tops 5 minutes a month, and you'll make way more money because you're going to have appreciation of your stock. If you invest in QYLD, RYLD, or XYLD, your upside is very, very, very limited. And they even say that on their website. It says the upside is very limited because they're selling their calls right at the money. But with what I'm going to show you, it's going to be a bit different, and you're still going to pretty much make more money. So if you haven't seen my video on selling QYLD, go check that out. Here's a link up here, but go check it out. It explains exactly why I sold my QYLD, and I'll be talking about that more here as well. But we're going to go into my spreadsheet over here and use some theoreticals. That's what we're going to be playing around with today. Just kind of, if I did this, what's going to happen and what could happen. It's not a guarantee, nothing here is a guarantee. Please do like the video if you've made it this far. In this scenario, we're going to say we invest $10,000, and then we're going to compare QYLD with UPRO, which is a S&P 500 triple leveraged ETF. So if S&P 500 goes up 1%, UPRO is going to go up 3%. Same thing with going down 1 for S&P 500. This is going to go down 3%. To me, it's not a big deal. It's a little bit more of a gut check because it's, going down or up 3 times as much. But the options are a lot higher. So, and it's S&P 500, so I assume it's going to continue to go up and to the right like it has for the last 50, 60, 70 years. That is why I've chosen to use UPRO. I use that in my Robinhood portfolio right now. That is the setup for this video. So you can see with the $10,000 at the current prices of UPRO and QYLD. QYLD is going to give me 560 shares, and I took the trailing 12 months of dividends from QYLD and got an average of 20 cents right here. There was a December payment that was like almost 50 cents. I took that out since it's an outlier and would skew the data a little bit. That is technically the average of the normal 13 or 12 of 13 months. And that gives you a payment of $113.56 every month. And then, you reinvest it, keep growing. That's the whole point of dividend investment. But with UPRO, we're going to have to do a little bit more work to figure out how much our monthly payment would be. If you don't know anything about covered calls, breakdown of it is you need to have 100 shares to be able to sell a covered call. Because options they're dealing in basically packages of 100 stocks. So you're selling a contract to sell your 100 shares at a certain price, which is the strike price, which we'll talk about more in a second. With the $10,000, we can only have 255 shares at the current price. So we can only sell 2 options because we only have 255. So We'll still have 55 shares kind of just sitting there, but we're going to sell 2 options with our 200 shares. We're going to go up to Robinhood, and we're going to go to UPRO, and you can see it's way down today. The Fed released a bunch of sad data today, and so that's why we're super down. But I'm not worried about it. It's actually going to be a much better time to buy because my average cost is $57. But we're going to go over here to the UPRO options, and I like to go about 1 month out, and we're going to use that because we're comparing it to QYLD, which pays monthly. So we'll go about 1 month out from today, and today is June 10th. So let's come out to July 8th, which is close, 4 weeks out. Now, what I'm always looking to do is make sure I'm on sell and call. So assuming I have my 255 shares at an average of, we'll say, $39.50, I want to make sure that I sell my call for more than $39.50. I'm assuming that at the end of my contract, my shares are going to be called away from me. So I want to make money from that action of my shares being sold or called away from me. But I also want to make money on my premium. First, we're going to address premium. The premium price is over here. All of these under price, that is your premium. You get that paid to you up front no matter what, and you keep it no matter what. Now we have to get into a little bit of the nuance, the little fun part of deciding on how much money you want to possibly make. We're going off the assumption of $39.50 is our average cost. So I will usually end up using under my chance of profit. I'm going to go about 85% chance of profit. So I click on here, and you look down here at my delta. So the delta is basically telling me if this were a percent, so you'd move the decimal 2 places over, there's a 22% chance that the buyer of this contract is going to make money. So that means there's a 78% chance that I will make money. Most people that are going to tell you about how to safely sell options is you're going to look for a delta that is between 20 and 30 or lower. So you can go up higher. We can go up and do closer to 90% chance of profit, and your delta is going to be lower. So most people are going to say anywhere from 20 to 30 or 0.2 to 0.3 is a very safe way to do it. We're going to go with the 85. We're going to use this price right here. So this is 85 cents. You times it by 100, so it's $85. So we're going to plug that in over here. So we're going to do equals 85 times 2, because I can only sell 2 contracts. And that's $170. That by itself makes a big difference of $56.44 on the same amount invested, on $10,000 invested right now. You can make an extra $56 a month. If we change this to $100,000, I don't have $100,000 laying around, but if you do, we're going to have to change this to 25. That's a $1,000 difference. It's kind of a big deal. We'll change this back to 2 and 10,000. You see the concept here. So you're able to go through and do this exact same thing for yourself. If you wanted to, we could say that we're going to try out a safer growing dividend payer. We can look at the ticker symbol O, Realty Income, and we can come over and see their average. We're going to say is about 24 cents from the last 12 months. So we can plug that in right here. So that gives you a monthly payment of $36.30. So that's clearly not going to work out for my goals of making enough money from this that I don't really have to depend on my day job to make me money. So eventually, when I have $100,000 invested, this is going to be a lot different. This is going to be, $2,000 a month. If you have any questions about this, go ahead and let me know in the comments down below. Also, if you would like a copy of this spreadsheet, I can send it to you if you want. My email is down below. If you don't know anything about spreadsheets, I'd be happy to send it to you and give it to you so you can play around with it. Or if you know how to do spreadsheets yourself, it's not too difficult. If you're using Google Docs, you just use Google Finance up here and then the stock ticker and the price, and it pulls it up pretty quick and easy. If you have any questions, let me know. Please do like the video if you've made it this far. I would appreciate it. And again, if you haven't seen my video on why I sold all my QYLD, go ahead and check that out. Here's the link right here.